All right, here we are back again for the love of the game, acquiring and operating micro SaaS firms. Issue 18, stepping in with a deal teardown, and I got my man K. Lou with me. How we doing, my friend? Happy
We are
days.
doing we are doing amazing. I was almost thinking we need some air horns in the beginning. Issue 18.
Yeah, we the best. Oh man, I flipped you. Yeah, I've been going deep on like the OG kind of underground hip hop tracks, and I was just like all the high tech tracks. We do need like some kind of sound component to the brand. That's very well called
Mm.
out. I'll have to think through that. Riverside has like and in a former life, doing the podcast with all Vio and Dubs was mixing it up. He had like a little finger drum kit, and so it'd be like doo-doo. So
You
we'll
guys had
spice it
your
up.
own mixer. That's awesome.
Yeah, it was spicy. It was spicy. Um, all right, well, let's jump in, huh? So we've got we shipped the performance portfolio kind of wrap and strategy last week. Put a lot of energy and heart and soul into that one. Hopefully that was useful for the crew. This week, getting back to our regular programming, kicking off with a deal teardown today. We're looking at a digital credential management SaaS doing 41k MRR. That's a mouthful, but when you jump into it, it's interesting. And man, there's some cool tailwinds happening in that category. When you start to think about the disruption of higher education, you start to think about a bunch of stuff. Um, Probably not something that, or obviously wouldn't be something that, not something that we're going to pursue. We don't like to talk about the deals we're pursuing until they're done. But anyway, and then part two, operating concept, we're going to step in and look at 2x OG strategy frameworks that kind of came up in my world a little while back, and I thought it was time we paid some homage to the OG. And then OKR teardown. Man, we've gone hard at pricing and monetization, so I figured we definitely need to share out a lot of that thought process and some of the frameworks that we've come across because they are badass. And then musings TBD. We'll see what happens on musings. Sound good? Issue 18. What do you think? You vibing? Yeah.
I'm bobbing, baby.
All right. Cool. Well, let's jump in. So, and I'm going to do a little screen share here because we're going to pepper you with some numbers.
Lots of
So
numbers.
let me, yeah, for the folks at home. All right, so Digital Credential Management SaaS. So I'll read the headline. I know this is spinning up. Cool, there we got eyes on it. So 41k MRR, that's the headline. Profitable SaaS with 896k in trailing 12-month revenue and 576k in trailing 12-month profit. So about a 60% profit margin that features a superior alternative to leading players in the digital credentialing space. This solution is recognized as the most comprehensive digital credential management tool in the market, offering a blah, 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 blah. Cool. Asking price, they want 5 milli, which is about a 5.5x on the trailing 12-month revenue, and definitely a discrepancy between MRR and their revenues. So we'll touch on that, but that implies that there's some non-recurring, non-kind of SaaS-driven revenues in there, which makes you
Yep.
think about professional services, which makes you think about implementation, and then you wonder if it's
hmm
sales-led growth. And I'll stop there before we pull the whole thread and the sweater comes undone.
Right. Especially at a team size of
So
14, you imagine, are there some biz devs, some sales folks in there?
like what's happening?
hmm
So 5.5x multiple. We like the margin. It's about a 60% margin, as you called out. 14 folks on the squad. The product stack is about as busy a product stack as I've come across. Full stop.
Yep.
And we've mixed in a or I guess mixed in a chapter in these deal teardowns. And we'll get into that. But I want to lean into the product stack more than the group or the audience is probably used to. Annual growth rate, not shabby. Year over year, 81%. And they've been around since June 2020. So we'll leave it at that. Scaling Vector scorecard average, popping with a 3.1 out of 4. And so we start with industry outlook, and then we jump into some product tech stack analysis, which is new for us, and a SWOT there. And that's for mostly the assumption is a lot of peeps listening are like me that are go-to-market operators, revenue leaders, sales leaders, whatever, non-technical, non-engineer folks. So I'd like to kind of, under that assumption, elaborate a little bit more on the tech stack because that's a blind spot. That's an area that you can't tolerate if you're in our line of work. You need to kind of round out that knowledge base, and hopefully we can help you do that. Then we get into the actual SWOT analysis of the business, and then we look at some market comps. We're moving away from the return scenario modeling because, yeah, generally speaking, it just didn't feel very useful. It's like, hey, this is going to be a dope return if these base case, assumptions go well that are based on comparable benchmarks, and it's going to be
Right.
this is what break even looks like, this is what IRR looks like, and it's like, okay, cool. But it's so early in the process that I think you want to aim small, miss small, and model out some kind of thing so you understand what kind of magnitude the returns are looking like and start to understand the cost structure of the business, et cetera. But for our purposes, I thought it was more important that we actually fixate on the attributes of the deal. Gucci.
Gucci gang.
All right, my friend. So, the industry first. So, what the hell is digital credentialing, Kalu?
Digital credentialing. So it sounds a lot like the one password solutions. The essentially a robust password manager. So it allows you to not only store your credentials, but generate credentials for various tools as you go along. And then it manages the compliance on, hey, you need to also update your credentials at a certain point.
Totally. So, and that's like a conventional context, right? That's where credentialing kind of typically comes from,
Yeah.
which is like a lot of like OAuth, password management, et cetera. Credentials meaning something that certifies a status, a stature, authorization, something.
Yeah, like an
And
identity
that's kind of the
provider, going from physical
exactly.
badges to digital badges.
Exactly. And in this context, it's to certify knowledge or education or that you've undergone some type of skill acquisition. And what's interesting, if we look at kind of the macro industry, it's growing a lot because I mean, do you have any digital certificates? Have you done like an Udacity course or Reforge course or
HubSpot, Salesforce,
there you go. Yeah,
Outreach,
totally.
SalesLoft. I mean, now like Global Entry, their stuff is all digital. I had to go through and get their digital credentials recently. So if you walk through customs, they're just like scanning your face and your identity, and they check you right in. You don't have to stop at machines anymore.
Totally. Totally. So the economy is moving and like the example that I use down below in this is like when I was in business school and I'm obviously a little biased on this whole conversation, but it was like if we saw a textbook that was newer than 2 years old or that wasn't older than 2 years, we were like, wow, this is a current textbook. Like this curriculum must be relevant. And you'd read case studies that were about companies you knew. And so I think that was kind of like a case in point of like, hey, the world is moving faster than curriculums and these super thoughtful kind of syllabuses and higher education can move. And a lot of that has to do with just like 4 year programs, 2 year programs. I mean, think about this, like prompt engineering, and I don't want to be cliche and
Hmm.
another talking head that's just talking about that shit. But imagine if you're, in a machine learning course right now and it's a 4 year program or, whatever, 2 year program. Is there a likelihood that prompt engineering is going to be on the curriculum as a skill?
Yeah.
Zero. Oh no, 0.0, right? I mean, if it's
You
like a
think
traditional
so?
school, dude. I mean, they're gonna have to pivot mid school calendar year and introduce some new hyper relevant shit. So what do people do? They're like, cool, I'm gonna go to Udacity. I'm gonna go to this cool ML, vendor that has a reputation for skill like HubSpot, right? Like
Yeah.
Salesforce that, are like a CRM administrative kind of skill set. I'm gonna go to the vendors that are the authority in that regard, and I'm gonna get certed up and I'm going to acquire that skill as I need it in a snackable manner on demand. And then I take that skill to the job market and I monetize it versus these
Okay.
robust kind of generic education kind of cohorts, right?
Yeah, I see what you're saying. It's kind of like how the government incentivizes a lot of the private companies to go out and do their bidding, and then it's like, here's a tax incentive. You can move faster. The smaller programs, the SaaS programs, let's say like the LMSs, they 100% can move fast. And then like the curriculums of traditional schooling, that's more like the government. It'll take a few years to catch up, but my alma mater, RIT, they've already started including like AI prompt engineering courses like in the curriculum. So now it's like electives. You can add it on to your main major.
So, or even if you're an external party, like there's probably a certification, right? It's
Yeah,
like, hey,
yeah,
you don't need to pay, you don't need to be a full time student. Boom, $2,500. You do this thing. It's 60 hours. You take a test at the end. You throw this badge on your LinkedIn profile or wherever, and away
yeah.
you go. So I think so. Skills based hiring is the big one, as you noted in a corporate setting, and I think there's kind of a few things to think about in the market. You have like corporate learning, which is a huge
Hmm.
initiative, and there's crazy compelling data about the organizations that offer more career tracking, talent development as like a core competency of the business. Their profit
Yep.
margins higher, their retention's higher, yada yada. And then you have educational systems, which are kind of undergoing a crisis, I guess, an identity crisis, where they're like, hey, like Harvard Business School online is like Harvard Business School is the thing. They introduce all this synthetic scarcity. And at the end of the day, it's like, well, but they have some of the best substance possible. Like in terms of content creators, their professors are absolutely elite, but academics sometimes fall out from being totally relevant because they're in academia and not in a professional setting. So needless to say, Harvard Business School is like, yo, ML, this other kind of shit. Cool. You're the chief, technology officer at this crazy company. Teach this certification thing. We're going to serve it up online. We're going to charge, a fraction of what our tuition is. And it's online now, so we can serve it up to a shitload of people. And boom, we'll certify them at the end. And that's the kind of currency that is involved to actually say you did this, you learned it, you acquired the skill. So needless to say, I think this is an obvious kind of digitization, very macro, a lot of tailwinds. You've got it hitting the public sector, the private sector. There's already technology integrated into the more digitally mature groups, as you noted, in learning management systems, otherwise, AKA LMSs, Cornerstone. I note some of them in the below, like I can't remember what SAP's is, credit, whatever. There's a ton of LMSs. What was the one back in the day in New York that was popping off? That wasn't.
There was Litmus.
Schoology.
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 Litmus was one too. I'm trying to think. There was another one like back in my Namely HR tech days that was just getting everyone's business, but I can't remember right now.
Summer Greenhouse was absolutely ripping on the ATS, and this is called this is like 2015-ish. So this is when like those kind of like very fringe human capital management use cases were starting to really rip, because it was like, hey, it turns out that like recruiting is a huge point of leverage. Like if you can streamline the applicant tracking bit and provide an amazing candidate experience, you're gonna pop. It's gonna rip. Oh, by the way, you want to develop your employees, and it's like, no shit, it's not just about benefits and payroll,
Another good one that came up as we were talking, Thinkific. A lot of companies have white labeled Thinkific and created their own internal learning solutions for onboarding, for changing career paths within the company. It's crazy.
Cool. And then the last, or some of the other stuff too, I looked up a lot of data, like huge structural decline in enrollment for traditional MBA programs, huge structural incline, or just like up and to the right in like Udacity, Coursera, Harvard Business School's online thing, Wharton's thing. Scott Galloway, who is near and dear to my heart, he was my favorite professor at NYU. He's a brand strategist. He's just a savage beast. His books are great. His podcast is great. He's just an amazing human generally. He has section school, which started as section 4.
When you see trends like that, then you notice why, like the value of why Salesforce, HubSpot, Outreach, all these guys put together universities, because you get their digital credentials. Like, why would I go to school to get this thing? I got it. Now I can just go apply for this job and be great at it.
Totally. Yeah. Or it's just like the world moves too fast for like this 4-year, 2-year based thing that's like, hey, we're going to give you lectures, and it's from a professor that doesn't know shit about the business because they haven't been in the business world for 10 years. Yeah, yada, yada. So anyway, and then you have somebody who is like the celebrity professor in Scott Galloway being like, hey, I'm going to do this because I'm kind of frustrated by the fact that NYU doesn't let in every bright human being under the sun that they can, right? Like they're choking off the access to this knowledge, which is restricting the evolution and progress of talent in the broader economy, yada, yada. And I don't want to get too meta. Obviously, this topic's near and dear to my heart. But anyway, now we're going to get technical and weird. So product tech stack analysis, man, I'll tell you what, large language models, whatever you're using, ChatGPT, Claude, Bard, whatever, they're useful. I hope this is for the people that are not technical out there. Next time you're like, oh man, like I wonder what Jamstack is, you should be like, yo, technical GPT. What is Jamstack? Explain it to me. Like, how is Jamstack used in the context of this business that I'm looking at acquiring? Provide a quick SWOT analysis. So that's what I did here. And I don't want to spend a ton of time, but the stack is Azure, which is cloud infrastructure, right? So this is how they're managing the servers, databases, networking. This is compute, just like AWS. It's all kind of the same vibe. Then you've got .NET Core and C.
This is all power in the back end. This is like
but C, because I know C dot, but C
sharp
hashtag C sharp. Thank you, C sharp. Yeah. And so this is back end, and then the application there is also pointed at API development. Then you have Vue.js and React.js, which are both front end languages.
So
React
the way
being,
to
go ahead.
summarize this for everyone is you're gonna have your server. So that could be AWS, Google Cloud with your computer engine, Azure, whatever that is. And then you're gonna have your backend logic. That's where your net core and your C sharp is gonna come in. That's gonna literally tell the backend of your application, everything that you're coding, how it should work on the server, right? Then your front
Yep.
end, whatever user's interacting with, that's where your React and your Angular JS, like your JavaScript, that's where everything comes into play. So the front end talks to the back end, which talks to the server. That's the logic between the three layers. And then for the business operations and capturing user viz and to process data, that's where we have the beauty of Python and Node.js. So Python is going to say every time this user does this, report it to the server. So we can start capturing some
Totally.
server-side events. And then Node.js, that's where it's going to capture those server-side events and then report it up to your BI tool.
Beautiful. Holy shit. Take the mic every time for this section. Please, God. Yeah, so simply put, right, you have a server, which is where everything's stored. You have backend, which houses data, and a software application, right? At the end of the day, it's mostly a repository of data that takes certain actions to process data and serve out outputs. And then you have a user on the other side. So simply put, it's like, updating records. Cool, that's stored somewhere. Now when I update this record, I want to take action. I want it to send an email, whatever. And that's always kind of helped me to simplify that. Like, software at the end of the day is about organizing information and making stuff happen based on actions. It's as simple as that. And then obviously you wrap all the languages around it and it gets a little bit heady. Cool. And then I guess in the general, from a SWOT perspective, it's kind of two sides of the same coin, right? So if you look at on the strengths, they're like, whoa, like there's a versatile range of technologies here. They're all pretty established. You have strong ecosystems. And what's interesting too there that someone put to me very wisely is on the length, like, when you decide a language that you want to, establish a product or the coding language that you want to use, like you want something that's up and coming hypothetically, because that's where up and coming dope developers want to be. But at the same time, perhaps there's a more finite talent pool that's competent in that language. So perhaps then you maybe want to draw from a more kind of legacy. I don't know, maybe legacy is the wrong word, but because then you have a broader talent pool to draw from. But hypothetically, those are the least or less dope engineers because they're working in what could be considered an antiquated language. So obviously business is about trade-offs, and trade-offs are pretty acute here. So is there something you want to add?
Yeah, my one tip for anyone that's diving in and wanting to understand how this all works when you're choosing legacy or a newer language that's being developed, I would say for all things back end as it relates to the servers, stick to legacy languages because they don't fail you and we trust them for proper uptime and security, right? The newer languages that are being developed, yeah, it sounds good and it will have a library that's consistently getting progressed by elite engineers that are learning this new language. But you'll usually see that on the front end. How do we get users to interact with our product even better? Like, let's look at Web 2.0 standards, Web 3.0 standards. A lot of that is on the front end. So when you're having those discussions, back end is always good to go with legacy and what's trusted. Front end, experiment all you want.
Love it. Boom, bam. So on the strength side, versatile range of technology, strong ecosystem, scalability, performance. On the weaknesses side, complexity, right? You're chaining together a bunch of different technologies or languages rather. Integration challenges, finding and retaining skilled developers, resource intensive, right? Literally either side of the same coin. On the opportunity side, innovation and product differentiation, as you noted. And then with Golang too, some performance optimization opportunities. And then on the threat side, again, it's like maintaining standards, maintaining the stack, resource costs as you start to bring in all these specialists and kind of tether them together. So a lot of action there. And it probably ends up being about a draw across everything, but it's progressive and it's got, at least it's, the assumption here is it's, utilizing a framework in some capacity. It's not like some hand-rolled PHP, which is a weird thing that we're familiar with, but cool. All right. So let's pivot now and talk SWOT. Strengths. So the strengths that I noted were, just to zoom out a little bit, I noted category tailwinds, as we've basically kind of already kicked to death, foundational segments and monetization, and unit economics. So we can just take these top to bottom, and I guess we'll just crack through the category tailwinds. So I think the main thing is basically every education under the sun is trying to develop learning courses and then provide like some kind of proprietary skills. Like at Scaling Ventures, we would do, hey, you're certified in valuation, whatever.
Yeah.
And then that becomes a prestige unto itself. As we've already witnessed with, the challenge there, though, is brand recognition. And where it gets interesting from a certification perspective, and we'll get to this, is if you can become the standard, then there's very much like a winner takes all type situation where it's like unless it's like I don't know, the XYZ credential. Like if that was via XYZ credential, then it's legit. Like it's bona fide. That is a solid credential. They maintain standards, etc. Whereas when everybody under the sun is issuing their own credentials, it's hard to say that they are up to any kind of standards or that they're even real. It's like, who knows if this person learned any shit, right?
Did you just make this up in Photoshop?
Yeah, right. It's like, yeah, I've got my certificate in Photoshop. Yeah, it's fine. And then on the education side, they're offering infinitely more course-driven certifications, et cetera, but they already have the brand recognition, right? If you have a certificate from Harvard Business School online, that's pretty legit. Anyway, but tailwinds, certificates, digital credentialing is becoming increasingly relevant, period, in basically all walks of life. And this is where you start to think, but like hardcore category tailwinds, that's kind of venture capital-y, right? Like it's a growth market, it's digital transformation, it's basically universally applicable to every business under the sun, also the public sector. Oh boy, now we're starting to talk about billion-dollar TAMs, and now all of a sudden the VCs get excited. But we'll leave it at that. Foundational segments and monetization. So, and for us too, like, what's the big assumption when we're talking to a seller? What's their aptitude? What's their core competency?
They don't really, all they really know is how to be like an owner operator. But in terms of like the whole, like getting into the depths of how to monetize this business, what to do with the tech stack, they're not going to know a lot of that stuff.
Totally. They're slinging code and building product probably as a function of the product that they need in their life. So they're like,
yeah, that's it.
Like they are the ICP. They know the shit out of the problem set they're trying to solve for. They know the use cases, the jobs to be done, yada, yada. And so I think the assumption here is that a lot of times like, okay, but they don't understand acquisition channels. Cool. We'll get some channels going, or we'll try to find kind of the channel product fit, lean into power log, get all, 80% of our results from that one channel, and then start to stack channels and I guess eat into that remaining 20%. But most of the job is done in terms of getting to that next plateau. Monetization. God damn it.
Got to teach them what KPIs to look for too for the monetization.
Totally. Or I guess just the general thing is like, hey, how should we package the product? It's like, I don't know. Like in some conversations, it's like, we have our most expensive thing, and when we would, make new shit, we would put it in the most expensive package. And it was like, okay. Like, I mean, that's definitely one way to think about it. It's like, hey, how do we, but I guess the concept of bundling, of laddering to kind of work your users up to the most expensive plan over time based on, mutually successful outcomes. All that stuff is kind of not even an afterthought. It's just not part of their matrix, not part of how they think about stuff. So I was impressed to see this group
just building and shipping product.
Yeah, like they had a clear kind of segmentation in their mind that was like, all right, we're selling to SMB and we're selling to enterprise. I like the fact that like credentials issued, which kind of to me almost felt like minting NFTs a little bit. Like in my mind, I was like,
it is. Because if that's the product you're printing, then how many credentials have you issued?
Totally. Well, and I think that
can you segment that?
And I didn't. Wow, this is interesting because I didn't really write about this, but I think what is a very trippy thing here is like, hypothetically, this should be on a chain.
Holy moly, Web 3.0. Whoa, yes.
Like this should be on a chain. That's how you ensure legitimacy of a credential.
Yes.
Right.
Oh, if they had a ledger for this, oh dude, now you're getting me really excited about the potential. I was already excited about the business. Now I'm like, what are we doing?
Well, because I'm looking at it and I'm like, whoa, you need like distributed buy-in to the legitimacy of something. I was like, that sounds like everything that blockchain is about.
Yeah, no, 100%. The only challenge is once you go through that tokenization process, you're going to eliminate most of your customers because who they're talking to in SMB and enterprise, they're probably not even ready for that conversation. And if they are, it's like 1% or less. Totally. How many companies today are actually ready for tokenization? Not many.
I'm going to kill the screen share. It's a little distracting. Yeah, totally. So I was very impressed. This crew has segments established, and then the usage-based component, which at this point is like credentials issued. which is a little bit bogus because it doesn't change their cost structure. I don't know. But anyway, it's a two-part pricing model, which
But it could.
it could. And, whatever. The thought process was there, and the market has proved the market is willing to bear that kind of structure, at least to the tune of $1 million
Right.
in recurring revenue. So cool. Happy days. I think from here, probably the next evolution would be to break up enterprise into public and private. And maybe they just totally steer clear of public because I talk about this in the risk component because there is kind of a federal analog established
Yeah.
precedent around how credentialing works for institutions, et cetera, and that would be tricky to disrupt. Anywho, foundational segments.
Although you did touch on a perfect white label opportunity. Look at how
Yeah.
Intuit went to the government, created a free tax solution, but still sold the premium version. Not saying we want to be like them, but there is an opportunity. If the government has a special way that they do it, let's have just part of the platform work for that. And if your enterprise is in the public sector, you take our public sector product. Done.
Yeah, love it. Totally. And that's where you start to think about, man, that book I was telling you about, like it's taught me so much about just like a thought process around
Price
like,
roadmap.
well, yeah, and it's like, are these users or is this actually your distribution? Are your users customers? And this is all kind of converging around the same shit with like Reforge and how they think about loops and pricing and monetization. But being thoughtful about that part where it's like, hey, actually, we're going to give this away to the government because they're just like free distribution into these, educational institutions. And then that's distribution from the function of the students into the corporates. And those are our real customers. So you start to think about kind of compounding revenue streams, if you will, but it's like, hey, once we build this, how does our business model change? How do what's the product value? How does our pricing mechanism change? So, and that stuff's all a living dynamic thing, right? It changes over time.
And how do we report on all of that to prove that it's working? What's our hypothesis?
Or know
What's
where
our
it's
goal?
at, or know where it's at. All right, unit economics. So they're throwing up super impressive 60% profit margin. We spoke about that, and they're at about $1 million in revenue. And just as a reminder to everybody, unit economics is how much is a customer worth, customer lifetime value, minus the cost to acquire them. Ideally, you're looking for 3 to 1. This crew is ripping, which means low acquisition cost, and presumably large lifetime value, which means low churn. So all to say that PLG is probably kind of core to what they're doing, and I would venture to guess that most of their traction has been in SMB up until this point. And so if they want to punch through that plateau, they probably need to layer in a lot more sales-led growth and giddy up after like true enterprise, like Fortune 500, like the Procter and Gamble's, the Coca-Colas. And it's like, yo, we're going to help you. Because, I mean, I can't even imagine how robust their internal skill development programs are. Like they probably have teams of 30 people that are just like performance management into learning and employee experience. I mean, you know the drill, probably just bananas. But anyway, they'll need to get in there. And I think this is an interesting point too, to share just kind of a disclaimer about my view. Like, I think there's so much conversation right now about product-led growth and sales-led growth kind of being either or. And it's not, it's like, the sales motion evolves with the maturity of the business, to put it simply. And I think it's never PLG versus SLG. I think it's like, when do we do one of them? And then when do we layer in the other? Or can we do both at the same time, which, focus equals discipline or focus equals performance. So you want to probably sequence those very thoughtfully. But I'm totally gone of like, oh, that's a PLG play. Great. It's like, yeah, cool. But eventually you hit a ceiling in the TAM and you need enterprise salespeople to knock down those accounts, et cetera.
Exactly. Like we talked about before, when the two are perfectly married, that's when you're talking about a value-led approach. The product has in-app queues where it's perfectly onboarding the people to the true outcomes that they want. And then on the back end of that, wherever the product falls short, then you have sales-led individuals who can now show you the quantifiable impact of you subscribing for this solution. If you don't subscribe, then this is the quantifiable impact you'll continue to feel. You know what I mean? That's where the value-led growth comes into play. Like you say, just knowing when to hand off between product and sales.
It's a dance, baby. Like everything. And I think, well, time to value, it's a little salsa. And time to value is like a really good proxy too. It's like, yo, can a user get in this thing and perceive the brand promise in sub 2 minutes? All right, go hard at PLG. Go as hard as you can, right? And it's like, see what happens. And then, anyway. All right, so now we're going to shift gears and talk risk factors. What's your this is a weird question. What's your favorite risk, Kevin?
I've never been asked that question before. My favorite risk is having too many customers or making too much money.
There you go. Fair, fair. The one that's got me spooked, to your point, is like, and I guess how would I summarize? Well, I guess to your point, like the network effects, right, is a really good conversation. It's like, does the product become increasingly valuable as more users buy or consume the product, right? And the most typical example of this is social networks. There's a lot of other examples, right? So there's a winner take all kind of component here where it's like, hey, if you can become, again, like the de facto credentialing standard for private institutions, it should be a winner take all, right? It's like you are the Harvard of credentialing, and every business knows that if they want their credentials to mean anything, or any of the skill certifications, any of the shit they're offering, if they want it to mean something and have, global brand recognition. And again, back to that piece, because humans are heuristics. Like, we operate under heuristics straight up. An MBA, it's like, oh, you're smart, you got an MBA. It's like, be careful, be careful,
Yep.
be careful. But it's quick and dirty, right? Just the same, like, hey, or whatever. So it's like, we need to replace that void in some way where we can just move faster because there's an entity that we trust that, like, I guess, asserts something that we can believe in, and we move. So hypothetically, that goes away if it's like, well, there's this group that credentials it, and this group, and this group, and then it's like, all right, what's the real standard?
Paralysis of analysis.
It's like, hey, this is, JD Power's best driving car 5 years in a row, and it's like, what's JD Power? I don't even know what that is. It's like, that's the CEO of the car company that just won the award. Like, that's how bogus that shit is, And it's like,
right. And did you just pay for this?
yeah. Or, it's like, yeah. So anyway, but that sets up well for a winner take all, which sets up well for a roll up strategy, which we'll talk to. And those are always interesting when there's a network effect in place, because you can basically synthetically create a winner take all scenario by acquiring and rolling up all the players, or the ones that at least have hit a critical mass. In terms of the context here, the risk is that that you aren't capitalized to run that play, and somebody achieves kind of that critical mass, which Andrew Chen and the cold start problem, there's a lot of people that have like statistically mapped it. Like, it was like, you watch MySpace and Facebook's growth. I mean, again, this is like the most quintessential kind of cliche example, and it's like, oh shit, it's a race. And then it was like, no, it's not. Facebook just won. Their growth is going just like hyperbolic straight up. So you hate to be like, ooh, we're MySpace, this is great, we're going to compete with this other digital credentialing thing. And you think you're neck and neck, and then pow, boom, they're off to the races and you're done. Anyway, so there's a winner-take-all component. Another risk that I was thinking through is kind of public sector entry. So right now, the U.S. Department of Education, they credential institutions. So this is only kind of a risk on the public side, which would be selling to schools and basically being like, hey, your diploma is cool, but the rest of the universe is looking at, badges on LinkedIn. And LinkedIn has its own credentialing, right? Like, there's a lot of stuff that's happening here. And then the Department of Education is like, actually, we're going to issue, right, which on chain, we're going to issue your diploma, or we're going to issue some type of certification that this institution is above board and they're dope, and that's the real standard. And anybody else that was a private provider of that type of thing gets snubbed overnight. Happy days.
Yeah, you're no longer accredited.
And it's like, bye-bye. But the good news is, like, today it's bureaucratic, it's analog as shit, just like every other public sector thing. And that's fun to run at and attack for a while, but you got to know that they can pull the rug out from underneath you.
Yeah.
Last risk, they want a strategic acquirer. Oh, I wonder why, right? So they're like, hey, they're putting themselves up on the market like, yo, if you're one of our top 10, competitors, come and acquire us, and let's roll up, and let's, take a bigger chunk of this whole network, and let's try to become the de facto standard, at least in North America, or however they're thinking about it. So I think, which is very interesting, because as an acquirer, and this is the first time I've ever seen that as explicitly listed as well. Like, we want a strategic. And it was like, interesting. Yeah. Like, I wonder if they would even take calls from financial sponsors, or even like have that conversation. And my thought was like, if you pitch it as a roll up, they probably would, where it's like, hey, we're going to raise $500 million and we're going to buy you and your next three competitors, and we're going to go hard, and you can stay on the board or whatever.
Here's my thing. I think this is the perfect time, because you and I have been talking about strategic buys versus just direct buys as of recently. And in this scenario, I think it's their way of letting sellers know, hey, this industry is becoming commoditized. You might want to approach a roll-up strategy. So while you're thinking about dropping $5 million for this, we need it to be a strategic buy because you have to have other things within your ecosystem to complement this LMS, or you may want to go purchase a few other LMSs and just roll them all up together. I think they're trying to give these guys know what they're doing. They clearly know their industry, and they're trying to put the seller on notice and saying this doesn't make sense if it's not a strategic buy. And you and I have been noticing that a lot with just the pricing refresh we've been doing for our portco.
Yeah.
Maybe a strategic buy.
And strategic buyers too, like it could also be a vertically integrated one where it's like, hey, Cornerstone's going to buy you because you're credentialing tech, if there is
That's
a tech,
true.
right, which has to be in like some kind of minting thing. But anyway, so strategic could be like an actual direct competitor, and now we're trying to consolidate market share, consolidate customers, exploit any kind of synergy on the product side, yada yada. And then you have
Yep.
upward, backward integration, which in this case, like, if we think about vertical integration, it would be an LMS. So anyway, there's a lot of strategic opportunities, just like with any asset. That's that. Cool. Let's hit quick wins and opportunities, and then we'll take a quick look at market comps. A lot of thumbs up on the market comps. All right. So we've spoken about a lot of this stuff, and we've kind of woven it into the conversation thus far. But I think roll up to establish a global standard. We just mentioned it's a winner take all. There's network effects here. Cool. Let's go. I mean, the challenge there is that some of these groups, like Credly, like 2 or 3 of these groups in the market are venture backed, which means they probably had way overbaked valuations, and everybody's upside down in the cap table. So they're going to want to try and save as much face as they possibly can. Maybe not, but the bottom line is there's institutional capital. They're going to ask for big valuations. That's going to increase the cost to get this thing done. And then the other bit too, as a roll-up strategy, is notoriously difficult. You have to just like mum is the word. Like if any word gets out, it's like, oh, like you want to be the last house on the street, and you find out that the developers bought every house and they're going to scrape it and turn it into a strip mall. And it's like, oh, what do you think my house is worth? It's like,
Leverage.
yeah, it's like my house is worth the last 4 houses you bought because I'm the one thing standing between you and your strip mall. So
Monopoly, baby.
yeah, Monopoly. Amen, dude. Yeah, you got the boardwalk. Let's go. So anyway, so that's a roll-up strategy. Very difficult to execute. Sales-led growth, as we spoke about. And I think in this capacity, it's like, hey, you need to go kick down enterprise accounts. Yes, you need humans. You need solutions consultants. You need implementation. You need all that stuff. And then on the other side, you want to go hard at like partnerships, presumably. Like maybe you hit up Coursera and Udacity and convince them to standardize their credentialing so that all these massive online open courses, aka MOOCs, mean something more meaningful to the job market, whatever. Those are partnerships. That's a biz dev effort. That's humans, sales led. You need to do it, or you're kind of going to be capped wherever you're at. And then again, once you hit a revenue plateau, you're probably terrified because you know that all the while it's like who can acquire more market share so you can try to become kind of the de facto standard. Lastly, vertical integration. Here's some data points for you, Caleb. 42% of Fortune 500 companies use an LMS, like a institutional LMS, which is like Cornerstone, SAP, Docebo. You mentioned all those. And Zippia, which is a super sketchy ass data source, said that, but I was like, all right, whatever. Companies with comprehensive training programs have 24% higher profit margins. So it's like everybody's rolling out learning management. They're trying to credential it. They know it's a way to acquire or attract and retain. Like all the talent value props are usually based around learning management performance at this point. And they need to credential those people, give them certificates on the other side. Like one of the most valuable things in the market, as you know, is like a Salesforce admin certification. That's like, boom, straight, just add it to your salary. Have a nice day.
Yep. Literally how I got hired for every one of my jobs. Do you know Salesforce? Yes. Do you have a
Yes.
certification? Yes. Can you
Yes.
fix this problem? Let's screen share for 30 minutes. Yes.
And it's like, boom, away you go. So obviously,
Yep.
if you could partner with those groups, integrate vertically, that requires humans. Any other quick wins or opportunities that crossed your mind, my man?
No, I think we have it covered. Yeah, I
Beautiful.
think you have them all covered.
Beautiful. Let's jump in here and look at some comps. All right.
Uh, really quick. I did drop a message in the chat. I do have a hard stop to another call.
Cool. You could jump if you need. And I'll wrap this up.
Okay.
Yeah, I mean, straight up, asking price comparables. We're looking at SaaS with ARR 800K to 950K. Asking price, the comparable is 6 million. This firm wants 5 million. That's 2 thumbs up. The revenue multiple comparable was 7.2x. They want 5.5x. That's 3 thumbs up. 1, 2, 3. Trailing 12-month profit margin for comps was 430K. This firm's sitting at almost 2x that, 609K. That's 2 thumbs up. And then year-over-year growth, comps were at 41%. This firm's at 80%. So, I mean, honestly, as I relook at it, could have been phenomenal. Yeah, it could have been 3 fingers up. I mean, I think the main thing is even the comps are probably misguided in what the valuation is, because we're playing it now more like the $1 million ARR tranche, and it's rare that you see micro sub 3 million trade at north of 5x. So I think a lot of these 7.2x's, these are based on asks and seller asks. They're not based on actual transactions. So we got to take all this stuff with a grain of salt. But I think all in, it's a venture deal. It's a winner take all. There's some weird competitive dynamics. This is not necessarily Micro SaaS where we can niche down and own a segment of the market and defend it and keep it profitable until we die. With that, over and out. For the love of the game, Kalu, thanks for riding with me, my man. I'll catch you later. Thanks for tuning in. Yo, feedback on the tech stack stuff. Was that cool? Was that not? Feedback in general. What's good, what's bad, and we'll keep the good coming. Go get them the rest of the day. Cheers.
All right.